let's get across what we're seeing in the macro picture and the implications of that. Lucas Santos joining us from ACY Securities. Luca, happy Friday to you.
Happy Friday, everyone.
What are you seeing?
Very cold Friday.
Well, if you happen to be in Sydney, it's cold in southern Australia, I guess.
Yeah.
What are you seeing in the States at the moment, given that macro data? Further signs of slowing, but no sign the Fed is going to move.
Yeah, so that's the whole picture at the moment, right? I think the Fed will only cut in October for now because we have everything, lining up for a continuation of hold and hold and hold and hold. As Jerome Powell say, it's good where we are at the moment. So most likely they will continue to maintain a higher for longer approach until October maybe. And then they do a 25 basis points cut and then another 25. And that's it for this year. But as you say, NFP is higher, CPI is lower, PPI is lower. So it's all the data is not working very well at this stage. So we have a cooling off CPI, but as a lot of economists are expecting, there will maybe be a pickup into the CPI from this month to the next month due to spending. Also, the NFP did have a quite above what was expected, not that huge in a sense. Unemployment still at 4.2 as the Fed predicted. So still very in line with what the Fed has been predicting. But I just think that's quite strange because with more people working, there is less spending at the economy and with a lower CPI. So I don't think that will be sustainable for longer. And most likely CPI will come up again, very, very sticky into the next month release that will be for this month, June.
Well, that's the expectation is that the effect of those tariffs is only going to start to begin to be felt now.
Yeah, after 6 months,
into the second half of the year. So Correct. How does that align then with the prospect of a rate cut if inflation is actually rising?
Yeah, well, that's exactly what the Fed has been saying as well. We still have to see what the effect of the tariffs will be into the economy because, as you just say, it's not yet been felt. So it will take a while, maybe another month or so, to start to be feeling that into the economy. I guess Trump has been quite putting some needles into Jerome Powell, into Twitter or X, whatever you want to call it. I think it should be appropriate to cut the rates. Inflation is down. We should be paying less in debt. That's what he's been saying the whole week so far. But he's still not yet seen the effects into the tariffs to the economy. Most likely, we will continue to have a very sticky inflation for the second half of this year. And most likely, the Fed will continue to hold until October, and then they will do a 25 basis points cut. US dollar has been feeling that pressure. A lot of money has been getting out from US, coming into gold. Europe as well, some tactical longs into euro against the US dollar. Euro just broke the 1.16 this morning. Most likely will continue to go 1.20, but it's been quite interesting, the market this last couple of weeks for the US dollar, breaking below 98, breaking below 100. So really interesting to see what Jerome Powell will say next week based on 97, 99% expectation of a pause into the rate. But what he will say, it's more important than what the market is already know that's going to happen with the rates.
So looking at the US dollar, as I said, 3-year lows there. What's the expectation then for the second half of the year?
Well, a lot of people are expecting the US dollar to go up again. I think it's trading around 98 at the moment this morning. But to be very honest with you, with all of these risk sentiment going on, yields higher as well. We just had the yields last week at 4.5%, the 10 years yields from US at 4.5%. So there's a lot of uncertainty at the market. So I don't see why US dollar would, suddenly just goes up or from now on. Most likely will continue to go lower, 96, 95, and euro dollar will continue to perform quite well. Euro will continue to perform quite well with these statistical flows into Europe. But if something happens with Europe and US, most likely euro will be affected as well. But in my opinion, yes, in the second half of this year, we will continue to see a very bearish US dollar.
And how's that likely to drive the Aussie dollar, do you think?
Aussie dollar, I guess Aussie dollar is still short with Aussie dollar. It was quite an interesting price action happening on the CPI. Soon as the CPI get out, Aussie dollar went all the way above 65, break that 0.65 sort of area, and then suddenly just spiked down again, and now is trading on that range of 64, 65. Most likely we'll continue to maintain on that pace until something catalyst happens into the RBA or with USA or in China, because the talks is still going on. Trump say that the deal with China is good, but nothing didn't change from the meeting that they had in Switzerland. So there's no much happening onto Australia. I guess most likely on that 64, 65 range will continue.
With that lower US dollar and rising geopolitical risk, how attractive is gold at the moment, given it's
very attractive, yeah. I think we were here maybe 2 months ago, was trading at 3,000. No, 1 month ago was trading at 3,000. Went all the way up to 3,400, retraced at 3,300, and most likely will continue to go to 3,600 in the second half of this year. I know there's people talking about 4,000, 4,500. Maybe not that much, but if risks continue to deteriorate, most likely 3,600 into the end of this year. So gold is definitely a good long position.